Coming into this Monday afternoon, these are the big things that are happening out there right now. We've got trade reactions in retail. Target and Walmart are warning right now of inventory shortages due to the drop in cargo transport coming from China. So I look at this and I think of two things. You're seeing a drop because of the drop in cargo, drop in stock price, but also is that going to put some sort of inflationary pressures on what we currently have on the shelves? I guess we will soon find out. We do have a bulk of Mag 7 reporting this week. That's Apple, Amazon, Meta, and Microsoft. These are all going to report midweek. It's either going to happen on the 30th of April or the 1st of May. All of these are happening after the market closes. And of course, May 1st. That's the other thing that's happening. We got May 1st coming around here very soon. And with it comes that age-old adage, sell in May and go away. I want to talk about sell in May and go away. I want to debunk it because I don't buy it. I don't buy sell in May and go away. In fact, I like to buy in May. And all my data backs this up. I want to show you this information and why my data supports a seasonal buy in May. So got a lot I want to cover with you here. So let's go ahead and get cracking. This week, I'm walking through Publix. That's a grocery store down here in Florida, among other places. And I'm going through the bakery. I'm trying to remember why. Of course, more birthdays. It seems like, when you're in a family like mine, there are birthdays happening several times a month. And so walking through and I see those cookies. You know the cookies I'm talking about, the Venetian cookies. I think that's what the Italians call them. They might also be tricolor cookies. You know what I'm talking about. The green, the yellow, and the red all squeezed together. They taste delicious. All right, so this week I'm going to be doing the tricolor cookie of the financial markets. We're going to start with the S&P 500, SPY. What you're seeing on the screen, and you're going to see this for the next 7 charts. All right, I've got a year-to-date high, I've got a year-to-date low, and I've got where we are right now. And I want to talk about these in a bit of detail here as we go through this video. Year-to-date high in the S&P came all the way back there in February. And we punched out around 613. Since then, we saw that drop that's happened. Just watch my mouse on the screen. You got a drop, a little bit of a pullback, but the big drop happened in April. And by the time we got to April 8th, we went from the low 600s to the high 400s. We've since pulled back. Now, I've put this cookie into 3 areas. The red zone is down here between the zero line, which is where the low is for the year, and 38% retracement. Between 38 and 61% is what I call the yellow, that cautionary area. And then if we get above 61.8%, we're back in the bullish camp as far as Fibonacci is concerned. Look where we are with the S&P 500 coming into the day, 600 and 550-ish. And we've got bullishness above 564. That puts us back in the green part of this particular year-to-date chart. So we made a long comeback in the SPY. Are we going to continue? We're off a little bit here coming into today, but a day doesn't make a chart, right? A day doesn't even begin to make a chart. Let's move to USO. This is crude oil. Crude oil saw its best part of the year really in mid-January, as USO was close to 85, dropped all the way down to near 60. This was a huge drop, most of that occurring in about a 1-week process during the month of April. Now, we've had a nice little retracement off that low, but we are still sitting in the bearish camp in terms of Fibonacci. I see 70 and 75 as areas of resistance that we need to get back to in order to see oil back above. And why do I want oil to go higher? All it's going to do is increase the price of gasoline. You might wonder, why would you want that, Tom? Well, I don't want that at the pump, but I want that in the stock market, because what's good for oil is good for oil stocks, and what's good for oil stocks is going to be good for the overall stock market in general. All right, GLD. Well, Here's a chart that's performed really well, and we've seen this before. Beginning of the year, trading down here in around the 240s, all the way up to 318 or change before getting some pretty big moves here. We were down $100 $100 a share in GLD, then up 40, then down 40, and up and down. This thing's all over the place. But take a step back, look at this chart. What you're going to see is we're still well into the bullish camp, and we don't see the first area of Fibonacci pullback unless we get down to 288. 269 would put us into the bearish camp, but still looking really good for gold and all things that glitter, including GLD. All right, let's get into Mag 7. 4 of the Mag 7. I'm gonna do this alphabetically. We start with AAPL. That's Apple. Hasn't really rebounded as much as you can see. The highs for the year were in January. The lows for the year were just 2 weeks ago. Since then, we've bounced back. We are into the cautionary part of the Fibonacci cycle. Now, it hasn't rebounded as much as the overall market because the overall market is much higher into this area, but it's done pretty good. Right now, they report on the close of May 1st after market close. Traders, and I've looked at the options on these. So we look at the options that expired this week, and traders, based on those at-the-money calls and at-the-money puts, are expecting Apple to have about a 5% give or take area from where we go into earnings. So we're expecting a 5% swing either way. Take a look at Amazon. Amazon had its high that occurred in February, and its low that occurred at the beginning of April. It's getting pretty close to jumping into the cautionary area, but it is truly still in its bearish area of Fibonacci. 192, all right, that puts us into the beginning of the cautionary area, and 212 puts us into the beginning of the bullish camp. Right? Those are the resistance levels that I see for Amazon. Expect a 6% range when Amazon reports its earnings after market close May 1st. Take a look at Meta. Meta's looking like the others. All right. Year-to-date highs, all-time highs in February, near 750. Pullback took us down below 500. That was a pretty big move to the downside, especially for such a strong company like Meta, right? Why has it gone down so much? Other than the fact that the tech market itself's gone down, a lot of these companies are now being critiqued for the amount of money they spent on AI. Meta's one of them. Meta's come off its year-to-date low, still in the bullish camp. Resistance numbers are 580. You take a look at the stock today. 580 puts us into caution. 642 puts us back in the bullish camp. Earnings are April 30th. An 8% range on the stock afterwards. So far, the highest we've seen because the options are trading higher than Apple and Amazon. And then finally, take a look at Microsoft. Microsoft is in the cautionary area right now. It's sitting neutral at $391 coming into this morning. I've got areas of $396 and $409 as its resistance heading into the earnings on the 30th of this month. Option traders are betting the price of Microsoft is going to range bound between above and below 5%. So it's got 5% on the over, 5% on the under by the end of this week. All right. So all in all, market summary looks like this. Markets are continuing to rebound. All right. And I look at today, and today is a bit of a move to the downside, but not much. We're seeing overall markets are continuing to rebound, with much of the tech industry still behind. And when I look behind me, I see a lot of red on my screen today, and most of that red is in tech. Mag 7 continues its earnings week this week. Do the markets push higher after Wednesday, Thursday, or do we drop back down into the bearish marks? And I think it's possible that we are going to churn this week until after market close on Wednesday and after market close on Thursday, which means Thursday and Friday could be the real volatile days that we have for these markets.